Gentleman from Texas, Mr. Williams, is now recognized.
Thank you, Mr. Chairman. And
A small businessman.
small business owner from Texas. I'm a car dealer in full disclosure back in Texas. And I'm glad to be a part of the fight to stand with you on this. And as part of the CFPB and Biden administration's misguided crusade on junk fees, which I thought we got rid of back with Obama, the CFPB has proposed a rule that restricts consumer overdraft services offered by the banks, which we've talked about today. And this proposal is an attempt to regulate overdraft as credit, which would require additional disclosure and underwriting, ultimately leading to many customers being priced out and eliminating a lot of loans that you might make to small business owners for payrolls and other things. Now, overdraft services offer a variety of benefits through increased financial flexibility and emergency access to funds. Many consumers will lose this critical safety net and be forced to turn to less regulated alternatives. We talked about that. And it's funny, on the other side, they're going to always help everybody, but the people they hurt are the people they think they're helping. So, Ms. Johnson, could you elaborate on the negative effects consumers will face because of this proposal and the burdens it will place on financial institutions?
Yes, thank you for the question. Consumers do opt into this product. 80% of consumers who use it say that they are really so grateful to have it, to have availability to it. Large lenders in particular have made significant innovations, not over the last couple of years under Director Chopra, but over the last decade, to the tune of about $28 billion for a 4-year period from 2021 to 2025. That's what we anticipate consumers are going to save. These innovations include 24-hour grace periods, include de minimis amounts as high as $100. So many consumers still see the bank standing the gap for them to cover the transaction, and they don't ever experience a fee. So it's a great program. It's a great product for consumers to have. We couldn't see this being made a credit product fitting under Reg Z because it is a very, very different product. You would have to not only have a disclosure to that consumer every time the consumer overdrafts on their account, but you also have to underwrite those consumers. And many of these consumers it's an emergency expense. They can't plan for these types of things. Many of the consumers that use overdraft also are almost credit invisible. They have very thin credit files, and so to underwrite them would also be very difficult, and they would probably lose access to it.
Well, it's called being customer friendly. It's also called giving service, which is what that is. Mr. Anthony, I want to talk about another proposed rule coming out of the CFPB that will end up harming customers. The proposed rule aims to limit the amount that companies can charge as late fees for credit card missed payments. And currently, there's a safe harbor maximum of $30 for the first violation, $41 for the subsequent violation within the next 6 billing cycles. The CFPB has failed to realize that reducing this safe harbor to $8 will have a negative consequence, and increased costs will ultimately be passed down to who? The consumer. So the rule will erase all options for making payments on time, facilitate more late payments, increase the overall cost of credit. When the safe harbor fee is lowered, you are punishing those who pay on time and will end up lowering access to credit. So, Mr. Anthony, can you expand on the consequences of government-imposed price controls and how consumers will absorb the cost and pay more credit?
Well, thank you for the question. Fundamentally, at the broadest level, it's a knowledge problem. It's assuming that we can figure out what's going to apply for every single bank, large and small, every single credit union and the like, and then force it down to be some binding price control that ultimately results in either shortages where people are completely denied access or higher fees elsewhere, which seems to be just kicking the can down the road and creating more distortions in the market.
Well, government-imposed price controls, that sounds a little like socialism, doesn't it? So the time I got remaining, Ms. Hartman, let me just ask you this. With all the politicized regulations coming from the Biden administration, could you elaborate on how the regulations we have discussed today would affect your credit union's lending ability, and how would it affect your ability to lend to a small business like mine that employs several hundred people?
Thank you for that question. So it would drastically impede our ability to lend to small businesses as well as increase our compliance costs. We spend a lot of money on cybersecurity and prevention of fraud for our members. That is costly and would, because of those costs and the fees go down, we would have to eliminate some services or start charging for services that we don't charge for now.
Well, that's great, and I appreciate you all being here. We're going to keep fighting, and I yield my time back, Mr. Chairman.